Welcome to Traders of Money, the podcast where the secrets of trading success are unraveled one expert at a time. My name is Jordan Meller, and I'm your host through the fascinating world of trading. As every episode, we speak to a new expert to understand their journey, their motivations, and their lessons over the years. Today, I want to introduce you to a remarkable figure in the world of trading. Saul Lokier is renowned not only for becoming a consistent and profitable trader, but also the prestigious role of CEO at the 5%ers firm. With 14 years in trading, he began his journey after Googling how to make money, which makes him very familiar to a lot of us. So let's dive in and learn from the best. Welcome to Traders of Money, Saul. We're excited to have you with us.
Hey, Jordan. Good to be here.
It is great. So I like starting these interviews with something light, something to get you out of your comfort zone a little bit. And it's one very simple question. Can you share something about yourself that would be considered an unexpected fact to the trading world? Perhaps something that a lot of people haven't seen before or they don't know about you. Can you share anything along those lines?
Yeah, I'm very, very, very impatient when it comes to trading.
Okay.
And so I struggle to follow all the mantras of trading. You know, all those "let your winners run," the trend is your friend. All those book phrases that we should be following in order to become successful traders. I struggle to do that. And so I came into a point that needed to adapt all my trading style to that fact, the fact that I struggle to to leave traders run, especially overnight. I struggle to sleep well if I have open positions, large positions open. So I think that's something interesting, the fact that I need to be in very small, short positions, very quick positions that I take profit constantly, because I really struggle to hold on my winners.
Yeah, I think a lot of people resonate with this, and I like how controversial this is to begin with, right? It's because you've just kind of thrown out all of the mantras, and against those mantras, you still a profitable and consistent trader. What you've done is you've curbed it to the way that you trade. So run me through that process. At what point did you go, nah, I'm not listening to those quotes anymore. It's not for me. I need to do this my way.
Yeah, so it is self-discovery process. It really is, because I didn't have like a personal coach or mentor to tell me that I needed to do this. So I got into a point that I discovered by myself, but after a lot of time losing money and struggling, that I understood that I needed to do this. But I tested a lot of strategies, and I learned a lot of strategies in the beginning of my career, and many of them, they were based on finding the right entry, and finding the trend, and and getting into the trade and letting the trade run. And as soon as the trade was going in my favor and it started reversing, even though I knew it could be a pullback and then the trade would continue in my favor, once that I saw my unrealized profit getting back to me, I used to close the trade. So I was like harming my performance, because I was interfering with the trades. And in forward testing, many times, I said, I will not touch the trade just to see the trade going back into my entry point or my stop loss. Sometimes it would continue in my favor, but I never had like a clear idea when would that continue running in my favor, or where would it go back to my entry price. So I was just in this non-ending process of not understanding what should I be doing, why sometimes continues in my favor, why sometimes go back to my entry point or my stop loss. And at some point I say, okay, I'm going to stop doing this. I'm going to understand who I am, the fact that I don't want to be holding trades for a long time. I want to be banking profits. I prefer to have that unrealized profit banked into my account, and I slowly tuned what I do into what I feel comfortable with. So that's where I started going into lower time frames, and even though to the all the way to the 1 minute chart, and started making a little bit of scalping and understanding what scalping really is, and the right way to do it, and just taking profits and looking for a new opportunity, and taking profits and looking for a new opportunity, instead of trying to ride that that trend.
Yeah. Did this moment come to you before or after you were consistent?
Before, like I was struggling to become consistent because of that. So once I realized that, that's where I started to become really consistent and very profitable. And so it took me a couple of years to realize this.
Yeah, I was going to ask, was there an aha moment? Or many traders have multiple aha moments throughout their career, and it sounds like you've just explained your key aha moment was the moment you realized you could balance your trading plan around who you were, not around what everyone else says.
So yeah, I would say that's one of the aha moments. The other aha moment I had was the deep understanding of what the market is meant to be. Yeah. So I started my trading career in the Forex market. Mm-hmm. And many of these mantras, let your winnings, ride the trend, and buy the bottom and let it run, all of that, I think is more suited for the stock market, for different markets that tend to be more directional markets. And I was trying to apply those concepts into the Forex market, which by essence is not a trending market. The Forex market is not supposed to be a trending market. It's supposed to be a balanced market. You don't want to see your exchange rate of the exchange rate of your currency, moving 10% a day against other currencies. You want to make sure your currency is stable and it doesn't move more than 1%, a day. And it's a very balanced, so it's a very rangy market. So once I understood that concept as well, that's when I started also, tweaking my strategy and taking those little profits that I mentioned, and not trying to find that trend in the Forex market, because 80 plus of the time the Forex market will not trend. It will just it will have it has these impulses, but it will not form a full new trend. It will just stay in those very large ranges. So that was another aha moment, the understanding that the Forex market is different to other markets. It's more a balanced and rangy market, and that I needed to adapt what I do to that reality.
Yeah, I think that's we have a bit of a competition between our equity traders and our FX traders here at TradeDelicious. So Aaron and David are renowned equities and futures traders, and Rich and myself, obviously FX traders. We like to have a bit of a competition, and while the systems, the processes, and everything, they do correlate. You can go trade any asset. You can take the bulk of what's moving. There are a lot of little niches there, which you mentioned. Like FX is two economies fighting each other, essentially. They're two pairs. They're a pair. They're against each other. So you want them ranging, and you expect them to be ranging. Where when you're trading an equity, it's just the value of that equity and what investors think. So I do agree with you heavily there with those. Let them run. Don't have take profits, just trailing stops and things like that. I do think it's more for a speculative assets when FX is evidently. I mean, can you remember the last time we hit an all-time high in an FX currency, especially any of the majors? I mean, it's a matter for equities. I do believe. I agree. So let's talk about that then. You moved into, you understood the market a little bit better. You understand how you trade a little bit better. You got consistent. Okay, you're starting to make profits. Let's talk about one of the ones that we always love to talk about: unforgettable trades. Win or loss. All right. Now I know by that reaction you're straight away thinking loss, but that's because they're usually the most powerful ones. Win or loss is. Tell me about the trade. I was going to ask, is there one that stands out? But I just read your body language instantly. Tell me about the trade.
Yeah, I have both. I remember the day of the winning trade, which was before the losing day. So
they correlate. That's yeah.
I'll start with the winning one. It's not one single trade, but it's a setup and a winning day. I remember it was the Euro JPY. Mm-hmm. At the very beginning of the Brexit discussions. Okay, should have been 2015, 2016, maybe. I can't remember the year exactly, but about that, I remember I was in Mexico at the time trading, and it was a Friday, and I remember, because of these conversations and discussions about potentially the Brexit at the very, very beginning, I remember finding in that pair, just by coincidence, because it's not a pair that I tend to look at, and I just see it just, respecting the like a 10 pip range. It's just going up and down inside that, like very, very fast inside that range. And I said, this is it. So I was just, at the moment it was hitting the resistance, I was selling, hitting the support, buying, taking profits, buying and selling, and that range continued like for the whole day. It was crazy. And I didn't have the capital I have today. I used to manage like a 20K account, and I remember in about like 2 hours, I flipped it. Like I turned it into a 40K account. So I made 100% return on my account in like 2 hours, which was crazy. And
exhilarating and shocking.
Yeah, I told my friends, and
yeah,
I told my sisters, and I told everyone, and I felt like a king, and I will do this every day. And I started asking around, like, why did it happen? Did this happen, every Friday, or this is it? Of course, never again happened. I didn't make that kind of return ever again. So I understood that was like a one in a lifetime opportunity. Let's call it that way. And I just realized how little I understand, because I couldn't even explain why did that happen. And then I was looking for that same setup to come back, and they never did. So I needed to move on. So that was the winning one, and the losing one was 2020 February, I would say, when the COVID just hit. So yeah, and that was a painful one, because I was managing my capital, but I also had it was before prop firms
were as prominent as they are today.
Yeah, there was no prop firms around, so I was managing my money, and I used to manage investors capital and family and friends capital. And the pair was euro JPY. And the way I trade, I tend to scale into my trades. And so I was just adding into the position, and went against me, and I kept adding. And the forex market, we just said, at some point it just reverses, okay, stays within the range. And because of the COVID and the volatility, and I didn't know that was something I've never seen. By then I've already been 2020, I was already 10 years into the market, and I've never seen what happened in that day. So I've never seen that pair running the amount of pips it ran. It was the COVID, it was just hitting, but it wasn't in the news, everywhere. So I didn't understand what was happening. So I said, okay, this will reverse, it has to reverse. So I was just adding and not admitting that I was lost. Ended up losing like 15K, like $15,000, which again back in the day was a very large amount of money for me, and for the of course for the investors. It took me a while to recover from that loss. I was devastated. I felt the pain, and I couldn't understand what was happening, and I needed to realize that, okay, I had the setup didn't work out, and me, instead of taking the loss, I just kept adding and just made things worse. But at least I learned something from that time. The fact that I never want to go back into that situation. I never want to go back into that physical pain after losing money. So from that day, every time a setup is failing, I just take the loss. So at least I learned
At least
something.
you got a lesson. That's good.
Yeah.
That's good. So absolutely, let's touch on that, because just from that story alone, you've shown how long you've been in the market. So 14
Yeah.
years you've been trading now. So you traded through Brexit, you traded through COVID, you traded through wars, you've traded through different presidents, you've traded through prime ministers, everything right around the board. How over time, and especially let's go the last 3 years, how's your trading differed? Have you changed anything in the how do you adjust your trading to stick with the running markets? I mean, 3-4 years ago, no one cared about interest rates. Now in the FX world, interest rates is all the talk. Now it's dying back down, right? So you need to kind of be relating to these. How do you go about adapting to these moving markets?
I think I have, I have evolved as a trader, and I think as I grew, and for example, as I became a father, for example, I've got 2 kids now. My risk profile changed. Okay, I think my risk appetite decreased. I used to be I used to be very aggressive. I used to wait for those news announcements to come out and bring all the volatility and try to catch those movements. I used to trade around. I remember when Trump just won the elections in the US for the first time, around when they were voting, counting the votes, the volatility was crazy, and I was trading around that. So I used to wait for those moments, and again, I was just trying to catch those volatility movements without really understand, the movements in the market or what causes the market to move. And it was really at one point that I say, okay, I need to become more professional about this. I need to understand why the market moves. I need to understand where do supply and demand come into place, and what prices come into place into in the market. So I think after the loss and after the going deeper into the market and how it moves and reacts and everything, I first decreased the risk I take. I back in the day, there were months, I remember months making 20% a month and 10% a month and 50% a month, not consistently, but I used to have those kind of months. And today there's no way I can do that, and I don't want to do that anymore. I'm happy with my 4% a month performance, because now I'm more focused on the long term and on managing large accounts and making those kind of returns, and not trying to make 20% on a smaller account. I'm more patient. I'm more patient waiting for the setup to come. For the price to come into the prices, into those levels of supply and demand where I want to be active, and on just if the prices are around those levels and the volatility is there and everything is there, then I'll be active in the market. I will not chase the market anymore. So I think with time I've just matured as a trader and as a human being. I've reduced the risk I take on trades. I've just more calm.
You know what's interesting? You started it off saying your aha moment to getting to a point of consistency was realizing that you're impatient and you need to adjust your trading strategy. Then how you've changed over the years to what you've just described there was all patience. You're long-term looking. You want the 4% a month, still great returns, by the way. If you can average 50% a year, I mean, you're massively outperforming major markets, but you're aiming for those smaller amounts. You're not getting into quick moves or really trying to push trades. You're waiting for them to come to your, like, you're a pretty patient trader. You just explained.
When I'm done in the trade, once I'm engaged in the trade, I'm very patient.
I like it. If there was something, I think we all go through the aggressive stage because it's that hunger. We don't get into trading because we looked at a chart one day and we thought, oh, this is a little bit interesting. The main driver of people getting into trading was the financial benefits, right? The idea that you can make money make for you. So we all come in with the same eyeballs, and we all get the same first impression. And we all tend to go a little bit more aggressive because we're hungry. We're hungry to get to those next stages, those next levels. If you could go back and talk to yourself again, would you tell yourself 10 years ago not to be as aggressive, or would you still say go aggressive?
I would say go aggressive. I think it's something interesting that I see how new traders are different from old traders. Myself being an old trader
Yeah,
or veteran.
two kids now, right? You're considering yourself an old man. You got the dad bod. But yeah, okay.
I think all those lessons from losing money around news trading, from losing money about using high leverage, losing money because not respecting your own rules, those all those lessons build in me what I'm today. And and I think new traders, in the forex market, the prop industry has just exploded. So many new traders, they don't get into that point of managing their own capital. They're looking to manage prop firms capital, and they're not as engaged with the capital as I did when I was managing my own capital or investors capital. Was very emotional experience. So today's, I don't think traders today will have those same painful experience where they blow an account or something like that, because it's not their money. So I think for myself, I think those experiences were the foundation of the trader I am today. And if I haven't had those experiences, I could not be managing the amount of capital I manage today. I will be taking very, very, very large positions, very aggressive positions, and potentially making my my growth chart a roller coaster instead of being the steady growth that is today.
Yeah, I 100% agree, and it is, because it's almost this is something I revel with a lot. A lot of people ask me what would be your advice for beginner traders, and I'm like, I can tell you everything that's happened to me. I can tell you about the losses, which mine was as silly as yours, adding to a position which I shouldn't be in, and I should have cut, and it went, and it went, and it went, and it was with investors' money. So it I totally agree. If I hadn't have felt that 2 weeks of genuinely feel like I was going to vomit, it scarred me, right? I know I'm never going to make that mistake again. Whereas I totally agree with you. Some of the traders that come through and they go to learn straight at prop firms and things like that, they lack the fear of what really happens and the financial consequences of what really happens when you do bad in the market, when you don't perform the way that you should. And that's interesting. Do you reckon there's ever going to be a way of traders getting through that? Do you ever think that if new traders come in and they learn only through prop firms, and that their risk is a couple of $100 every time they buy an account or something, not that the real money on the line, do you ever think they're going to be able to get scars? So as horrible as it is to say, these scars are what teach us, right? Or at least in our case.
I really don't know. My best analogy to what's happening with these guys is like using GPS and Waze while driving. So you and I, when we were younger, or when I just learned how to to drive, there was no GPS and no Waze and nothing. So if I got lost, I used to ask someone for directions or get a map. So I know how to read a map today, and to find myself. But young generations, they just get into driving using GPSs and Waze, and they don't have to struggle with asking or reading how to learning how to read a map. So I think it's the same experience. I don't know if these new traders will have that need of how to read a map. They just have the Waze already, so they just have the prop firms capital, and they will need to learn risk management techniques in a different way.
You're telling me it's what we're talking about is a back in my day quote. All right, is that what you're saying? We're just going to be sitting there going, back in my day, we had to go find investors to trade with.
Yeah,
that's what you're saying.
Those who take responsibility will realize there's long-term success waiting for them. If they stay calm and manage risk, they will really be able to scale their accounts and build their accounts and get to very large capital to manage. I see most of them just not having that discipline to follow their own rules. They just want a quick money, and they end up losing accounts, because of that.
Okay, let's transition a little bit. We spoke a little bit about your past. Let's talk a little bit about the future. Okay, 2024 is just clocked over. We're in it. It's we're here. We're live. All right, we're going. Any bold predictions from you? And I'm going to ask you in two different segments. Okay, I'm going to ask you as a trader. You got any bold predictions in what we can see in the market or emerging markets? And then I'm also going to ask you as the CEO of the Fivers as well, in the prop world, if you got any big predictions. So starting as a trader, is there anything that's on your watch list that you think it's a big prediction coming in through 2024?
Yeah, I hate predictions. Okay. I think as a traders, we need to react to what's happening in the market and not to try to build it. But I think there's a lot of reasons why the USD should weaken as a currency. And from that, different opportunities in the market. The stock market continuing to rise. It's just breaking, as we speak, breaking new highs. All the indices in the US. So I think there's room to go to the upside. So and in the forex market, shorting USD. But I might be wrong, and this is long term. And I think in terms of opportunities, I'm looking for ways to invest in certain AI technologies, in some commodities investments, such as water and I don't know.
You have gone to a patient old man, haven't you? You're going water. You're investing in H2O.
Yeah, but just as not as a trading opportunity, just as a long-term investment opportunity. So that's what I'm looking. That's what I'm looking for this year. In terms of the prop firm, recently this week, Oanda, one of the largest U.S. brokers, they announced that they will be opening their own funding channel or way to get funded by them. And I'm happy about this. I'm happy about the fact that high tier players will join or are joining the industry. I think that will set good standards to the industry, and it's way better than just these small prop firms just popping up every day, and they just with no infrastructure and not risk management and nothing behind it but marketing. So I think if finally the industry is joined by good players, there will finally be some standards set. Probably regulators will be more interested in getting into the industry, and I think there's I'm bullish for the industry during this year.
Yeah. I did read the news, and I do think that's fantastic news because it's going to remove a lot of the white label type businesses, right? If they're going directly from the provider of what was providing. And now I don't know if Oanda was providing white label services, but I know of other brokers that were. And you're right. They're now going to have the risk management department. It's now going to be run properly. And these brokers are already massively under scrutiny with regulation. Like, it's so strict. So elevating that, I do agree. I think that's going to be big for the industry, and we've already seen the growth over 2023 for the prop firm industry. It's just been remarkable. So yeah, it is going to be good. All right, I'm gonna shoot a quick fire round at you. I've got 3 questions. Okay. 3 questions, and I want a quickest answer you can possibly give me. You ready?
Let's do it.
What's one book every trader should read?
What I learned by losing $1 million. I think that's the title.
Okay.
Or lessons I learned by losing $1 million, something like that.
If you could have dinner with any financial mogul, dead or alive, who would it be?
Nothing's.
No one. No, you wouldn't want dinner with Warren Buffett, or to even go down to ex-presidents or prime ministers or any investors? No, I like it. Okay. Biggest myth about trading that you wish you could debunk?
Can I name a few?
Yeah.
So I think it's back to the things we were discussing first. Okay. Sadly, the entrance to the trading world, you know, it is very, very low. Okay, there's no there's no there's no, you know, there's nothing keeping
There's no barrier.
someone. There's no barriers. Yeah, that's it. That's
Yeah.
what I'm looking for.
The barrier to entry is very low.
There's no entry barriers for the trading world or the prop firm world or whatever it is. So, and you know, I can't think of another profession that has these same low barriers. You know, that the fact that you can, you know, open a retail account with $100, not understanding anything about what you do about to do with that, and of course ended up losing. So the entry barriers are so low, and also the fact that everyone can create content about that, and social media just, you know, all the social media content creators, they're just looking for the clickbait titles and the good thumbnails and SEO and, you know, triggering the algorithms. So the amount of disinformation out there, the amount of unrealistic expectations of what's accomplished, you know, realistically accomplished, you can accomplish, I think, you know, create a chaos in the industry and a chaos in traders. So I would remove all those myths of is an easy thing to do, is a get rich quick scheme, is, you know, is you can flip your accounts, you can make tons of money. So all of that, people need to get rid of that. You know, trading is as hard as any other profession. It's as hard, harder. You know, and it's a performance profession. So every time you engage into the market, you need to perform, and you need to, you know, you need to react, and you need to adapt yourself to the market conditions. So I will remove all of that, and then I'll remove all those, you know, what we started with, all the let your winnings run, all those mantras. You know, you need to take what works for you. You know, to take everything you hear, you know, out there and adapt it to your personality, to what makes sense for you, and then you will thrive.
I like it. I like it. So it's been an absolute pleasure having you on Traders of Money. Thank you for your time. Where can people hear more from you? Where can people get in touch or see the magnificent work you do?
Of course, visit our website, thefibers.com. And on our YouTube channel, we make a lot of content, and once a week, sometimes twice a week, I run the trading room, so you can see me trading, and I try to to explain what I do when I'm trading. I think those are good starting points.
Beautiful. Sal, thank you for your time, and have a fantastic 2024. I look forward to seeing you short the US dollar.
Thank you.